Here's a shocking reality. While homeownership remains the cornerstone of the American dream, millions of Hispanic families are being systematically shut out of the housing market by language barriers and outdated lending practices. The mortgage industry has a dirty little secret that nobody wants to talk about. Despite Hispanic Americans representing nearly 20% of the U.S. population, they face rejection rates that would make your head spin. Why? Because loan officers often can't communicate in Spanish, and traditional mortgage applications weren't designed for people whose financial lives don't fit into neat, predictable boxes. But here's where things get interesting, and maybe a little controversial. While the federal government is pushing hard toward English-only policies, thanks to recent executive orders aimed at creating what officials call a more cohesive society, innovative mortgage professionals are taking the complete opposite approach. They're embracing cutting-edge bilingual artificial intelligence to tear down these communication walls once and for all. Let me paint you a picture of what this looks like in practice. Imagine you're a Hispanic family trying to navigate the mortgage maze. You walk into a loan officer's office, and instead of getting that familiar deer in headlights look when you start speaking Spanish, you're met with an AI-powered system that not only understands your language, but actually gets your unique situation. The Hispanic Organization of Mortgage Experts just dropped a game-changing AI platform that's built on ChatGPT technology. It's not your typical chatbot that gives you generic responses and leaves you more confused than when you started. We're talking about a sophisticated system called Wholesale Search that can instantly scan through more than 150 different lenders to find the perfect match for each buyer's specific circumstances. And this is the part most people miss. This AI doesn't just translate words. It translates entire financial concepts and cultural contexts that traditional lending has ignored for decades. QB Hernandez, who heads up technology and learning for the organization, puts it perfectly. Education is the gateway to opportunity. But here's what he's really saying. The current system has been keeping that gateway locked for way too many families. Let's get real about what we're dealing with here. The Urban Institute found that households with limited English proficiency have tripled over the past 40 years. That's not a small demographic shift. That's a massive population that the mortgage industry has been failing to serve properly. These families struggle to understand complex loan terms, navigate residency requirements, and explain non-traditional income sources that are perfectly legitimate, but don't fit the cookie-cutter mold that most lenders expect. Rogelio Gortzen, who founded the organization, designed this platform specifically for the complicated cases that make traditional loan officers break out in cold sweats. We're talking about borrowers who don't have social security numbers, people with thin credit files, visa holders, and small business owners whose income doesn't show up on a neat W-2 form. Here's where it gets controversial. While some argue that requiring English proficiency creates unity, others see it as creating unnecessary barriers to economic opportunity. Danny Velasquez, a loan officer with GFL Capital, shared how this technology completely transformed his daily workflow. Picture this. He used to spend countless hours calling 70 different lenders one by one, waiting for callbacks, and often discovering after weeks of back and forth that they wouldn't accept his client's situation anyway. Talk about a frustrating waste of everyone's time and energy. Now, he can see all the requirements in one centralized location, eliminate unsuitable options immediately, and focus his energy on moving qualified buyers toward homeownership faster than ever before. I am just able to make the process faster and get them the house, Velasquez explained, and you can practically hear the relief in those words. But let's talk about real results, because that's what matters most. Heriberto Blanco Voya, a 38-year-old Las Vegas resident, recently experienced this new approach firsthand when buying his first home. As a native Spanish speaker, he and his wife expected the typical confusion, miscommunication, and endless paperwork headaches that have become synonymous with mortgage applications. Instead, they got crystal clear explanations about required documentation, honest assessments about whether their credit scores would work, and rapid responses to their questions. The entire process, from initial consultation to keys in hand, took just 6 weeks. Compare that to the industry average, and you'll understand why this approach is generating so much buzz. He provided me all the information I needed to buy, Blanco Hoya said. The process was pleasant and simple. When was the last time you heard someone describe getting a mortgage as pleasant? Now, here's where skeptics start raising their hands, and honestly, they have valid concerns. Artificial intelligence handling something as critical as mortgage guidance creates legitimate risks that we can't ignore. Families are making the biggest financial decisions of their lives based on this information. If the AI provides incorrect details about loan requirements, immigration status implications, or credit qualifications, the consequences could be devastating. Gertson acknowledges these concerns head-on. His organization has implemented multiple safeguards, including direct data feeds from lenders, real-time database updates when new loan products become available, and user reporting systems for flagging potential errors. When there are things that are incorrect, we are constantly correcting it, he explains. AI is a great tool, but it doesn't replace that human element of professionalism. And that is why we are constantly tweaking and making sure it is correct. But here's the million-dollar question. Is this approach creating a more inclusive lending environment, or is it just putting a high-tech Band-Aid on systemic discrimination issues? Jay Rodriguez, who works as a mortgage broker at Arbor Financial Group, sees the practical benefits daily. Understanding the subtle differences between various investors' requirements often determines whether a family gets approved or walks away empty-handed. He's particularly excited about how this AI platform helps train new loan officers and coaches entire teams on better serving their communities. Better Home Finance Holding Company is pushing this concept even further with their AI platform called Tin Man, specifically designed for borrowers with non-traditional income or documentation. Situations that are incredibly common among small business owners and independent contractors. They've also developed Betsy, a voice-based assistant that handles more than 127,000 borrower interactions monthly, with a Spanish-language version currently in development. Leah Price, who oversees the Tin Man platform, hits on something crucial. Financial literacy can be challenging for Hispanic borrowers or borrowers in other underserved populations. Tools like Betsy can interact and engage with customers in a way that feels supportive and not judgmental. That last part, not judgmental, reveals something important about the current system that we don't talk about enough. So here's what I want to know. Are we witnessing a genuine revolution in mortgage accessibility? Or are we just creating more sophisticated ways to exclude people while appearing inclusive? Is bilingual AI the solution to decades of lending discrimination? Or does it risk creating new forms of bias that we haven't even identified yet? And here's the bigger question that's going to make some people uncomfortable. In a country that's increasingly pushing English-only policies, should private companies be investing heavily in bilingual technology? Are they filling a crucial gap in service? Or are they inadvertently undermining efforts to create linguistic unity? What do you think? Should the mortgage industry be adapting to serve diverse communities in their preferred languages? Or should the focus be on helping these communities adapt to English language systems? I'm genuinely curious about your perspective. Drop your thoughts in the comments and let's have this conversation.